I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D Street. Well, it's panned out to be a rather muted set of mood as far as the market sentiments are concerned. 140 points of a decline for the Nifty, 22,400 and thereabouts is what we are hovering at. This is barring the 2 or 3 sectors which are rate sensitives that have been buoyed by sentiments on the cut of RBI's repo rate, FMCG, auto, consumer durables. Rest of the pockets are still trending weak today. PSU banks, IT sector, pharma, realty, metals, they continue to reel under pressure. There's a near 1.5 to 2% of a decline on all of these sectors as well. On the top stocks front, when we talk about the Nifty, it's the FMCG names that are definitely doing very well. Nestle, for instance, is the top mover, over 3% higher in trade. You also have HUL and Tata Consumer Products up and about. So the top 3 movers on the Nifty are from the FMCG pack. Apart from this, what's also pulled up is Titan Company and Power Grid among the top 5 movers. When we look at the drags, it's again the IT space. Remember, tomorrow onwards, we get to see the earnings season kickstart for the IT sector. And with all this tariff talk, there is a lot of uncertainty that's going around, putting a pressure on the IT pack. Over 4% cut for the Wipro stock. You can also see Tech Mahindra. That's down in trade as well. Apart from this, SBI has slipped about 3.3% lower. You have Trent, Shriram Finance and L&T also among the top declines as far as the Nifty stocks are concerned. F&O movers, you have NBCC, Max Healthcare, Godrej Consumer Products among those stocks that are buzzing. But Muthoot Finance is the one which is dragging after the RBI governor has indicated of newer rules, tighter rules that could probably come in for gold loans. You're also seeing Glenmark Pharma, Biocon, pharma space clearly under pressure, and that's after US President Donald Trump has said that they are going to be looking at pharma tariffs afresh very soon, and that's also putting a pressure on that segment. Let's in fact get into a conversation with our top guest now. We are now joined by Mr. Sharad Awasthi from Smiths. He is with us on the program to guide us through the market moves and what to expect going forward. Mr. Awasthi, warm welcome. Good to have you with us in our conversation yet again. We have been discussing so much about the tariff talks in our initial conversations, but let me start off with the RBI move today. Was it on expected lines, 25 basis points of a cut, but there's also a lower projection on both growth and inflation as well. He's also marked out that the RBI remains alert to what's happening in the external environment. He did say that tariffs are going to exacerbate the uncertainties that the world is grappled by. What exactly do you foresee from what has been announced? Will it be able to provide adequate cushion to Indian economy from the tariff blow?
Yeah, thank you for having me on the show. Uh, Difficult to take a call on that. I think the type of tariff tantrums that Trump is throwing around, 25 basis cut or a accommodative policy on the local central bank front. I don't think that would be enough to get through that because there are a lot of moving parts to this strategy, how it will play out in America, how the surplus will behave in the rest of the world, how the other countries would react to the tariff tantrums. So I think there are too many variables. We don't know how the currencies would behave, how bond yields would behave. The behavior over the last 3 4 days has been very erratic in terms of bond yields also. So I think all the asset classes are giving you very conflicting views. Actually, these are very unprecedented times. You're not really sure what to do, and anyone's guess is as good as mine as to how this is going to transpire over the next 3 to 6 months. But I think the best case thing you can do is in such uncertain times is take a call on the valuation comfort that you have. And I think as a domestic story, I remain confident about India, and I think most of the world is also very confident. In spite of the tariffs, you have a comparative advantage. We are not an export-led economy, so that should not hurt us much. So when I look at all this, I think on balance, we are in a good position. Whether this RBI cut is good enough to shield us against tariffs, I don't think it is possible. But in any case, I don't think it is very material for India, particularly directly the impact of tariffs. But certainly, I think if the global scenario does change into a bit of a ruckus, then it could create problems long term for global trade. That should be problematic for India also. But if we keep concentrating on the domestic side, I think India would be probably better placed against most of the other peers.
Hmm. Okay, fair point. Also wanted to just get a sense on the rate sensitive sectors, auto, real estate, for that matter. After these cuts that are happening, how do you approach these two rate sensitive pockets, sir?
See, I think long-term Indian autos and real estate both should do very well with your rising middle class, rising incomes, increasing propensity to consume much larger per capita incomes and more urbanization. I think both these pockets should do very well. Long-term real estate, we are very positive, though across the board, the valuations might not be very appealing right now. But there are stocks which you could look at, like a Signature Global or something like Macro Tech, most probably where valuations are not that expensive right now. So you could look at these stories. I think they are good stories to bet on in the long term. And something like a Keystone Realtors, I think these are good stories. They'll grow handsomely, and the valuations are not very stretched. On the auto side, I think the immediate push could be more on the two-wheeler side. So something like a Hero MotoCorp or Bajaj Auto look like better ideas to bet on from here on. And even four-wheelers, I think Tata Motors gives you an excellent opportunity at these prices to enter and create your long-term positions. Some hiccups here and there, yeah, you might see, but the new launches, I think new launch that has a lot of speculation around it. That could be a trigger for Tata Motors, and beyond that, also, I think yeah, some impact because of US sales from UK. But other than that, the other two, three pieces, the CVPs, the PVPs, and there is a demerger story. So I think all this combined at these valuations, I would be very comfortable buying Tata Motors for targets of around 950,000. Maybe you wait for 1.5 years, but I think that is something that is very much possible there.
Okay, one can actually look at Tata Motors from the auto pack here. Help us understand your view on the banks, sir. Looking at what the RBI has done, of course, Governor Sanjay Malhotra has continuously talked about liquidity, and he has been taking measures from the last 2 months odd to enhance the liquidity in the system. Things are looking much better from what was existing in January per se, and now with the rate cuts happening at this point in time, plus growth revision downward, what is the kind of credit growth that you anticipate going forward, and what does one really do with the banks and financials at this point in time?
Yeah, I think across the board you should continue to hold banks and financials. I think there are three triggers that are working in their favor. The first one is, the relaxation on NBFC lending norms. I think that was the one trigger which started this whole reversal of liquidity or flow in the economy. Now we have reversed that. I think the RBI is now comfortable with the level of, leverage, etc. that various all the numbers that various NBFCs are throwing up. And most probably the MSME microfinance stress is also most of it has been accounted for. There should not be fresh hiccups from there. That and a couple that with higher treasury incomes for most of these banks because of lower yields. I think finally the treasury piece will also start contributing to the incomes. And as we were talking, we have spoken earlier also that these tax cuts should result in a lot of leverage being taken by a large class of people on the retail lending side. So once that starts, I think even your advances should show some growth. The capex cycle should revive along with that, and I think that will also result in long-term loans that are disbursed by banks going up, corporate loans, etc. So corporate retail loans going up, treasury incomes contributing. Add to that the pressure from NBFCs, etc., and various credit lending blocks that were put in place by the central bank being removed. I think it's a very good position for most banks, and I think next 2 3 quarters we might see a possible, revision upwards of whatever advances growth we are looking at. Q4 provisional data till now, whatever has come up, looks very promising in terms of advances growth, etc. So I think it's very positive for the banks. And the fourth part would be that valuations are very attractive right now. So I think across the board, most PSU banks, the likes of SBI, Bank of India, Indian Bank, Bank of Baroda, PNB. Valuations are not stretched now. They're very reasonable. Even the private sector banks like an Axis or an HDFC Bank, I think the valuations are not stretched and they could provide some positive impetus over the next 3 to 6 months.
Okay, fair point. But also within the financials, I wanted to get into focus the gold financiers. Today, there's a sharp cut on IFL Finance, on Muthoot Finance, Manappuram as well. There was this indication that newer guidelines will come in on gold loans. This has been a space which RBI has highlighted even before, that there has been a lot of discrepancies by way of gold loans has been going on. There have been many companies that have been pulled up in the past with the way they have dealt with gold loans because of the rising demand as well. Do you expect tighter gold loans at this point in time? What would that mean for such gold financing companies, sir?
Uh, I have dealt with one or two gold finance companies, and I think the procedure certainly needs to be tightened. If the central bank is looking at it and commenting on it, I think they would have also felt that there are many loopholes that need to be covered. Earlier, we saw some change in the cash collection limits, etc., how they were being used. So I think now it's becoming a larger part of the total advances book, the banks and for particularly for the smaller NBFCs or gold finance companies, that is the major part of the book. So it's better that the RBI does come up with stringent regulations. There are loopholes, there are leakages that could result in long-term problems. So it's better that they are addressed sooner than later. And I think, yeah, there could be some tightness, but will it be very material to, as such, destroy the business as a whole? I don't think that's the case. But some regulatory tightness was something that you could do with in most gold loans. Muthoot, I would not be. I think most of the correction is also part because also already trading at 4.5 times price to book, probably, or 3.54 times. So does not leave much on the table. So within the gold finance companies, if I have to bet on something, I think Manappuram still looks better.
Manapuram still looks better. Okay, we'll focus on that. Now, let me come to the tariff question, sir. Something that we have been pondering about in our last few conversations. But today is when the 26% tariff on India comes into effect, and the world also with their respective tariffs as well. Already in the past couple of days, we've been seeing how retaliation has come in from China, US hitting back. So, two large economies at loggerheads when it comes to tariff. We are seeing signs of trade war that are emerging already. On the one hand, there is this question about, what is the kind of impact on recessionary fears? How true can they get? How much of an impact will there be? Will it be a long haul recession? And of course, what will be the impact on India as well of that? Second part of the question will be on the key sectors that will be impacted the most because of this 26% tariff, sir. So first, go on the impact of recession on Indian economy, sir, and then secondly, the key sectors that are most vulnerable.
I think as we have been speaking earlier also that since we are not an export-led economy, so I don't think it will be a very material impact in terms of the real impact. But yeah, in terms of the sentiment impact, you could have a lot of impact there because the nervousness that boils down from US will boil down to everywhere else, and there will be uncertainty regarding global trade. As you rightly pointed out, China is one of the biggest traders at the global scale. US is the largest economy. So both going into problems with each other results in a lot of global trade going haywire. And we live in a time where most of the trade channels are intertwined. Everyone's interlinked in terms of their trades and production, etc. So I think it will be a bit challenging for India as well. The actual impact might not be much directly because of the tariffs, but because of the tit for tat that happens globally, that could certainly be problematic, and it would be very difficult to pinpoint as to how it is going to play out. But from what I understand is it's largely tactics to negotiate basically trade deals, etc. And over the next 3 to 6 months, as these negotiations are held across countries, I think largely US will also understand that imposing these hands-on aggressive tariffs is not going to help them also because they also understand production does not shift overnight. So it's largely a trading gimmick. So it's okay. They want to negotiate. They're trying something because the other countries are very hard negotiators as well. Something like a China or somewhere, I think they will find it very hard to negotiate. So I think it's largely a trading kind of situation where they want to negotiate better. That is how it is going to play out. India largely insulated, but if it does blow out of proportion across countries and everyone starts looking at protectionism, it's bad for everyone, and India cannot escape that. So I think that way it could be a problem. In terms of sectors that could be worst affected, I think, as I've told earlier, also India is not going to give way to agri, etc. But I think electric, certainly the government is already talking about. Uh, The alco beverages could be something that could be hit a bit. I think that from there the international competition could heat up there. Not necessarily it'll destroy them, but yeah, some competition coming in from the on the premium side of it, which is the higher margin business for them. They could have more competition and price competition there, so they could be a bit negatively hit. Pharma, in case they come out with something aggressive, that is one sector which has not still seen a very big brunt out of this tariff issue. So the expensive side of the pharma business, which are fairly to fully valued, something like a Sun Pharma, Cipla, etc., could see some erosion.
Those could be the vulnerable sectors and pockets at this point in time. Any place which you feel is a safer haven in the Indian markets where investors' fresh funds could stay protected even if we are to see volatile times ahead?
No, I think it would be very difficult to find pockets that will not correct. The best would be that they correct a bit lesser, most probably. So I
Yeah.
think banks could be one space you could look at. The NBFCs, the locally dependent NBFCs, or the insurance companies, those could be very well insulated from all this because it is largely dependent on domestic business only. And I think insurance across the board, the valuations are not very stretched, maybe barring an HDFC Life where it could be near to fair value. So I think something like an LIC, something like an SBI Life, these are like decent bets. You could even take some medical insurance companies. I think the non-life insurance companies, they could also be decent bets. Some of them have seen some decent correction. And I think overall, the whole BFSI segment would be largely insulated against any kind of global. And FMCG already has been moving today, but I don't think across the board you have too much of valuation comfort in most FMCG stocks, so that's a challenge. So I think BFSI would be one space that I would look at as a very safe place. Even most of the NBFCs have corrected, the likes of an L&T Finance or a Poonawalla. I think they've corrected substantially, so they could be very good opportunities for me.
Fair point. And now, Mr. Vasti, I think we also need to focus on, the bigger challenge that faces us even beyond the tariffs. While tariffs have actually rattled the markets quite a bit, but I think the bigger wrecking ball could be what's coming ahead by way of Q4 earnings. We'll start off with the IT pack that starts off with the earnings tomorrow, and then we will go on to understanding what comes forward beyond IT sector as well. TCS kickstarts its earnings tomorrow. First up, what's your overall expectation on the IT sector as a whole on the earnings front? Do you believe because of these tariff-led uncertainties, there will be more question marks with respect to guidance that respective companies can give looking forward to FY26? Will they skip giving guidance this time around, those that are used to? Will there be huge amount of moderation there? What is it that you will be expecting to see from the IT companies, and what's your approach going to be on the IT sector amidst earnings?
See, largely what you can expect across the board in a blanket fashion is that most companies would, give you very subtle kind of hints, or those who were maybe giving you forward projections or guidances, they would be very nervous about what they're saying because, yeah, the mood is of very much uncertainty in the US. Though I still doubt that it's a whether it's a long blown recession in the US and the type of things that people are talking about because I'm not expecting these tariff things to blow out of proportion. But you never know. I mean, the way it is turning out, you never know. So I think it will be a bit nervous. So most of the guidance you will receive will be very subtle and maybe very conservative. So maybe some of the forward numbers are cut down a bit or curtailed a bit. Q4 anyways has not been very hunky-dory, and generally it's a slower quarter for most IT companies. So I think because it's Q1 in the US, Europe, etc. So I think largely you can expect a subdued quarter, a subdued outlook. But then what is its impossible impact on the prices? I think the prices have already discounted most of it. So I don't think you will see much of a correction there. Maybe a single day reaction to the numbers and the commentary, but nothing more than that. I think most of the nervousness that is there with respect to US, etc., in terms of the numbers that these companies can report is largely priced in.
Let's start off with the largest company, TCS. There, it's going to be reporting its numbers tomorrow. It's on a market holiday, and day after is when we will finally see the reaction to this one on growth, on revenues, on margins particularly, and on deal wins. What's your expectation on TCS, sir?
I think across the board, what we have seen is that deal wins usually have been good for these companies over the last 2, 3 quarters. Though in terms of outlook, I think they have always been nervous. I think margin improvement is something that's been missing for quite some time.
Hmm.
So might be on the deal win side also this quarter, you might not hear much. But yeah, in terms of numbers, etc., I think it should remain status quo, not much growth, and the outlook they give you for the future might be very subtle.
Hmm. Especially because of the flat constant currency, how do you expect their international, markets also having contributed? There has been this $30 million of a decline in BSNL revenue. That's also, marring the overall growth or the performance of the company. We have also seen that the rupee depreciation is unlikely to materially improve the margins thereof. Internal cost pressures also exist. How are you looking at these aspects, sir?
No, I think all this would largely balance out. Most of these issues occasionally balance each other out. Every quarter, it's very difficult to comment on everything and get a balanced approach. But largely, what I think is that they will have problems regarding, the outlook part of it,
Yeah.
not so much on the operational part of it. The BSNL deal or some hiccups here and there, these keep happening in the businesses, specifically if you have a PSU business and dealing with PSU, you could have problems there. But largely beyond that, I think most of the order win should be good enough. The international scenario should continue to be good. It's not very hunky dory in terms of the future outlook. But the existing condition is not much more jittery vis-a-vis what it has reported in the earlier quarters. So I don't think it will be too much of a nervous number in terms of what they report this quarter. But as in most cases, it is the future outlook that gets gloomier. So I think if their uncertainty is what they whisper in the board meetings, etc., or the phone calls, I think that is going to create some bit of nervousness. But again, I think most of that is already priced in, so don't expect much.
Okay. Also, sir, on TCS and on the IT sector, the client budgets, pricing trends, project delays, do you believe this could be important to watch out for investors, especially any discretionary spends beyond BFSI also? Will that be able to help us get any sense of whether there will be a recovery sooner than later, or will we have to stay with prolonged muted, earnings growth?
See, I don't think it will result in prolonged muted earning growth, but
Okay.
yeah, from the commentary, what you will understand is that they would also be very nervous about how it is going to transpire because no one is sure that how it is going to hit, the BFSI segment, obviously the manufacturing segment. And most of the largely clients are in the BFSI space, which will get hit if the manufacturing sector takes a hit either in the US or in the Euro region or UK. And most of these IT companies are largely dependent on these. So I think that will be a connection. That is why you will hear a lot of nervous energy around these con calls. At least this quarter you should hear because there is a lot of uncertainty. Next quarter onwards, most probably it will settle down. But because of this uncertainty, I think you're not going to see much of damaging price reaction because most of it is already priced in.
Okay, fair point. On the overall markets now, sir, we have seen the recent Monday lows. We've come back quite a bit, but what is the overall sense? Do you think we are in for a long haul, narrow band of trading action? We've already gone through this last 5 months of a pain where nothing happened. Investors did not make money at all. Investors have patience has been tested quite a bit. But because of this tariff talk looming large, do you think there will be further few months that one has to really wait before signs of complete reversal also emerge?
Yeah, I think complete reversal is something that you will talk about once you reach all-time highs. So obviously that will take some time.
Yeah.
But in terms of being too much pain, I don't think that from here onwards we have too much pain. If the announcement rumors etc. from the US yesterday, if you had seen it, I think the type of price volatility we saw because of the rumor only was very steep. So I think there is nervousness on both sides. It's not only on the bull side, even on the bearish side, there is a lot of nervousness that if something does pan out to be, not so negative or just marginally positive, there could be very strong reversals in the market. And for India particularly, I think a lot of the buy China, sell India trade is behind us. The currency weakness is behind us, so that should be very supportive. And fortunately, I think over the next 2 3 quarters, even the quarterly numbers which have been very flattish to negative, they
Hmm.
should also start seeing some traction. So all these 3 4 reasons combined, I think there is a high possibility that Indian markets would substantially move higher from current levels. But yeah, it will have to be along with the global markets, cannot be a standalone outperformer. It's a rarity. So I think, yeah, globally there could be uncertainty, but if the tariff talks are presumably solved as I'm expecting them to be, that they are largely negotiation tactics, and once he gets the opposition countries into on the table, and he gets a deal through, I think most of the tariff tantrums will be behind us. So maybe 1 or 2 months of uncertainty globally, but beyond that, I think it is for the benefit of all countries to sit on the table and negotiate better deals, and that is how it should transpire. So I don't think it will be very negative. Maximum 2 3 months or maybe less kind of movement, where also most probably relatively India should outperform.
Fair point. Well, we will thank you then, Mr. Awasthi, for being with us on the show and helping us with all of those deep insights on various topics that we've discussed on tariffs, on earnings, as well as various pockets where one can find opportunities and where one still needs to be a lot of cautious at this point in time. Markets down by about 130 points, 22,405 at this point in time. We'll wrap up the trade now, viewers. About 3 minutes to go before we shut shop for the day. It's panned out to be a rather muted setup, about a 0.5% of a decline on the Nifty, 0.5% fall on the Nifty Bank, 260 points gone there. The broader market slightly weaker than the frontline indices. You can see a 0.6% of a decline on mid caps, about a 0.9% of a fall on the small cap index. Barring FMCG, consumer durables and autos, rest of the pocket still slipped. PSU banks lost quite a bit of a ground. You can see about a 2.5% of a downfall. 2.3% of a decline on IT stocks, pharma down by over 2%, metals down by 1.5%, realty down by 2% too. Realty is actually not playing part to the RBI's rate cut news at this point in time. Top movers on the Nifty, you have already seen Nestle, HUL, Tata Consumer Products, Titan and Power Grid. Let's look at the broadest set of the names that we have today. 1.1 Solutions continues to be about 10.5% higher. Strong momentum there. Jyoti Labs again from the FMCG play. You can actually see the stock up nearly 9.5-10%. You can also look at names like Parsvanath Developers from the real estate pack that's outperforming and bucking the trend, 7.5% higher. You also have SPL, Infra, Chemfab, Alkalis, so some chemical names that are buzzing. Sundaram Fasteners also about 6% higher in trade. Those are some of the names that are actually doing very well in the broadest index. Nifty, next 50 names beyond the first 50 names of the Nifty. You have again the FMCG consumption oriented names, Godrej Consumer Products, Britannia, you have United Spirits for that matter, Dabur for that matter as well. All of these stocks are buzzing. From consumer durables, you have Havells that's buzzing in trade. You also have Swiggy, that's also up by about 1.5% odd or so. Some power related names, Power Grid is up on Nifty. You have CG Power that's also buzzing in trade. Some cement names like Ambuja Cements that's also on the strong showing list as far as the Nifty next 50 names are concerned. Let's look at the banks. Well, it's the NBFCs, Home First Finance Company, Repco Home. You have Credit Access Grameen, Sundaram Finance, all of these stocks that are also up and about in trade. Let's look at some of the smaller pockets. Again, like I said, cement is up. There are a lot of building material stocks that are buzzing in trade. Let's also point out to the fact that we also have some names within say power space, transformer, rectifier, power grid, like I mentioned, NHPC, that's up and about in trade today. Titan is buzzing in the large cap names from the gems and the jewelry space, whereas it's Muthoot and Manappuram Finance that is declining today. Let's also focus on some of the other aspects on the stocks which are actually buzzing. Chemical names today clearly in the buzz, so one can actually focus on that. A lot of tobacco products are up. Godfrey, Phillips, ITC, both is up in trade. Let's also look at some of the other pockets that we can mark out for all our viewers there. Engineering names are again up in trade today. Sugar names, some of them slightly higher as well. But it's a, kind of a very mild set of moves that are coming in. Textiles actually rallying in trade today. Kitex garments, many of those stocks that are buzzing in trade today. Keep an eye out on that too. Remember, there's a +1, China +1, Asia +1 kind of a move that we are seeing. 22,420, the last print on the Nifty today, 115 points lower, 0.5% of a decline on the Nifty, 0.4% of a cut on the Nifty Bank. We leave you at that, viewers. Remember, we have had a busy set of a day with RBI policy being announced and being digested, and apart from that, the tariffs also getting implemented tonight. As we move forward, we will get to know what the US, policy decisions, how have some of the negotiations, how have some of the statements come in overnight. We will now have tonight and tomorrow night in the US and the Asian markets kind of a move that will translate into Friday. So remember, there was also this nervousness right before the market holiday tomorrow on account of Mahavir Jayanti, and we will be back onto trading action on Friday now, and that's when we will get 2 days of a handover. So there could be, in case the global markets continue to fall, there could be some sentiment impact on Friday's session as well. We'll leave you at that, but do stay tuned on to Business Today Television. 4 p.m. is when you hear from top economists and top voices decoding the RBI policy for you. So stay tuned.
Incidentally, I did a very deep analysis of the entire ecosystem which tried to misinterpret my comments, and you'll be amazed at the findings. It was a typical hatchet job by the Congress party with their various handles, completely distorting my comments and my effort to inspire our young starters